Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Thursday. It is November the 3rd, and I am going to spend a few minutes with you just talking about one of my favorite stocks, maybe yours as well, called Energy Transfer. Now, today is the 3rd, as I said, and just a couple of days ago, on November 1st, Transfer reported their earnings for the quarter. So I'm going to touch on that. I'm not going to go too deeply into that, but I do want to go a little bit deeper into Energy Transfer itself and just talk a little bit about the company and where it's at. So let's kind of take a quick flyover here in terms of what happened before they reported earnings. The previous quarter, the estimated earnings per share was 29 cents. They blew right by that number and reported earnings per share of 39 cents per unit. Remember, Energy Transfer is a master limited partnership, so they have units. They don't have shares. In other words, not common stock, it's units. Now, the estimated earnings or EPS for the third quarter, which was just reported, as of September 30th was 30 cents. So it's worthwhile kind of taking or using that as a backdrop to see how Energy Transfer did this last quarter. By the way, let me just preface what I'm about to share with you along the lines of saying they had a good quarter. So even though there were sort of a couple of hits and misses, I'm going to show you some of these things. In general, I'm okay with where Energy Transfer is and what it's doing. Now, the reason why I struck out this middle part is because that was the consensus earnings per share forecast for Q3. But we already know what that is now because Energy Transfer is already reported. So instead, what I'm doing is I'm looking specifically at the fiscal year 2022. And the earnings per share forecast increased over the past week, that was last week, from $1.40 to $1.45, which is 3.5% up. And over the past month, analysts have increased their forecast from $1.38 to $1.40 for the year. So that's up about a 1.5% or so. There are only 4 analysts making forecasts here. 3 of them have raised and 1 have lowered. So it's a 75% positive if you want to look at it that way. Or otherwise, you might say 1 of the 4 is right and the other 3 are wrong. So what happened? So they reported on Tuesday. Today is Thursday. And on an earnings per share basis, they beat quite handsomely. The expectation was 26 cents and they reported 35 cents, up almost 34%, but they missed on revenue. How much did they miss on revenue? Well, the expected revenue was 24 billion and they reported about 23. So they missed by about $1 billion, which is about 4.5%. Now, in the greater scheme of things, what I'm sharing with you here is on Energy Transfer, this revenue miss of $1 billion doesn't bother me too much. I'm more focused on the earnings per share, which in my humble opinion is pretty good. So some highlights here. They reported net income attributable to partners for Q3 of $1 billion. That's $371 million greater or an increase over the same quarter last year. Then net income per limited partner unit, remember I said the units, not shares, is 29 cents per unit. But there was a $126 million legal charge. Now, one of the things about Energy Transfer is they're being sued all the time, right? If it's not the administration that's suing them, it's the Environmental Protection Agency that's suing them. But there's always some litigation going on. And in the last quarter, they had to write down about $126 million in legal charges and another $130 million in negative adjustments related to a hedged inventory of NGL and refined products, transportation, and services. So these 2 items alone impacted their EBITDA, so earnings before interest, taxes, depreciation, and amortization, by about $260 million, right? So that's kind of hit. This doesn't happen every quarter. The good news is it doesn't happen every quarter. The bad news is it can happen again this quarter. So you never know with Energy Transfer. They're mired in litigation on an ongoing basis, which is not unique to pipeline operators and arguably energy companies in the United States right now with a hostile administration and EPA that's gunning for them at every opportunity they get. So the adjusted EBITDA, so as I said, EBITDA, earnings before interest, taxes, depreciation, and amortization, 3.09 billion. Same quarter last year was only 2.58, so a nice uptick there. And distributable cash flow of 1.58 billion, up from 1.31 billion the same quarter last year. Adjusted EBITDA for the full year, they're guiding up. So they've increased their guidance, which previously was 12.6 to 12.8 billion, now 12.8 to 13 billion. So that's gone up a little in terms of guidance for the rest of 2022. Sorry, for the next quarter. And then, of course, the full year fiscal 2022. Growth on CapEx, 1.8 to 2.1 billion. Quarterly cash distribution, this is quite neat. They just recently announced the increase to the dividend, 26.5 cents per unit on a quarterly basis, which is $1.06 annualized, which is up 70% over Q3 of 2021. And their goal is to return distributions to the previous level of 30.5, so 30.5 cents, with another 4 cents to go per quarter, which is $1.22 annualized. So if you are in the stock for the dividend, which is kind of like partly why I'm in the stock in the first place, as an equity, I expect the current price around 12.13 to maybe go up slightly. We'll talk about that in just a second. But at the same time, I'm just sucking away this 8.5% dividend on an ongoing basis and buying more stock. The portfolio of assets, neat little line here that you can look at product and geographic diversity. So even though it's an energy company and it's primarily a pipeline operator, they're actually quite diversified because their multiple segments generate high quality balanced earnings. No single segment contributed more than 30% of their adjusted EBITDA for the 3 or the 9 months ended September 30th, 2022. In addition to that, their segment margins, the margins on the different segments, are fee-based and therefore have limited commodity price sensitivity. Now, this is important too, because obviously as the price of WTI and Brent and natural gas fluctuates, goes up and down, and obviously over the past few months, mostly down, this has less of a negative impact on Energy Transfer because most of their fees, most of the margins are fee-based and not really tied to the commodity prices per se. So far, so good. So let's go a little bit deeper into the weeds and we look at Energy Transfer. You can currently buy the units at around $12. Is that a good price or a bad price? We'll take a little deeper dive in just a second. This is not a small company by any means. It's a $38 billion company. It's sitting just left of the right-hand side high on its 52-week range. So it's trading quite high. But I believe in this particular instance, we actually have some run left in the unit price. And even though it may fluctuate on a day-to-day basis, I believe it's more likely it will kind of edge upwards rather than downwards. By the way, my cost basis on Energy Transfer is around $8.40 or so. So this is a really good position for me to speak from a position of strength in terms of where Energy Transfer is today. As you can see, as I kind of just intimated, the performance of Energy Transfer compared to the indices, and here I have the light blue line is the Dow, and the purplish color is the S&P 500, easily outperformed the indices and has been a good performing stock for me over the past year or so. The PE ratio shows us it's still quite cheap, right? I'm looking for 15 or below, and it's less than 10, so that's quite attractive. And I mentioned this annual dividend yield a minute ago now, right? 8.5%. So $1.06, and they're looking to increase the dividend. So Tip Ranks has Energy Transfer at an outperformance at 10. Everything is green, everything's bullish. To me, that kind of flashes a warning sign. Very often, if everybody's bullish, I'm the contrarian, right? So I go like, okay, what's wrong with the stock? So let's take a little bit of a deeper dive once more and see if there's anything that we can pick up that is perhaps not as good as what we expect it to be. Tip Ranks has Energy Transfer as a strong buy. There's only 6 analysts on the sell side that are covering it. Lowest price $14, highest price $17. So the median somewhere, or average somewhere in between there. And the average would take you up about 25% from where we are today in terms of price. The hedge funds have been sort of piling in. You might see some familiar names here that are more or less familiar to you, depending on who you follow and what you look at. Charles from Wexford and Stephen from Golden Tree, and then there's David Tepper. David Tepper is quite a well-known guy, Appaloosa. You can see David Tepper from Appaloosa increased his holdings by 6.4% or to 6.4% when he added to his holdings just recently in the last quarter. But there's no one here that's reducing. They're all adding or new positions or otherwise just no change. Now, this is where we get a little bit into the weeds, right? So this is where you get to the point where you can say, I got to make a decision here. Is this good or bad? And what does it look like? Maybe the motherhood question is, if you own Energy Transfer, like I do you just hold it? Do you add more at $13 or so? Or do you just cash out and take some profit? For me, right now, it's a hold. And the reason for it being a hold rather than a buy, even though the analysts are saying there's a 25% uptick on the unit price, and of course, there's this huge, big, fat dividend. The reason why I'm holding is because there are a lot of things here sort of in the weeds that are not really concerning, but just things that you need to be aware of, right? So we need to be educated investors. And what I'm trying to do here is to give you both sides of the coin so you can have an objective opinion as to whether energy transfer is right for your portfolio or not. So it seems fair value with a PE of 10. And the reason why the PE of 10 is fair value is because it's in line with the median for the oil and gas and consumable fuels industry. In other words, it's pretty much the same. So earlier on, I said it's cheap with a PE of less than 10, but so are all energy stocks, right? So what I'm saying now in terms of my objectivity is energy transfer is not the begin and end all. It is priced sort of the same as all the others. So you could say like, okay, if I look at all the energy stocks that have a PE of around 10, which one's the best buy? Maybe energy transfer is not the winner for you. For me, I'm already long on energy transfer, so I'll just hold it. The price to book, we're looking here at the most recent quarter versus the TTM, which is trading 12 months. So MRQ's most recent quarter, TTM trading 12 months. Price to book, 146 times. You know, it seems to be fairly priced. It seems to be okay. So what's going on here? So now we look at growth rate. And then it says ET saw an earnings decline in spite of positive revenue growth over the past 12 months. All right. So once again, I don't really want to spend too much time looking at the most recent quarter. I'd rather look at the trailing 12 months, right? So over a period of a year. Now, the earnings per share growth on a trailing 12-month basis, the industry has been at over 500%. It's huge. Obviously, the commodity prices helped, right? And yet, ET came in at negative 10.6. But remember, earlier on, I said the segments are fee-based, not tied to the commodity. So you cannot treat energy transfer the same way you would treat, for instance, Occidental Petroleum, because they're not a producer per se of oil and gas. They're a pipeline, natural gas provider, etc. So it's a different type of business, right? So even though the industry average is way beyond energy transfer is not the industry median. It's not the same type of business. So these are just things that you need to be aware of. How about revenue growth? Well, the industry has done phenomenally well, obviously, once again, tied to those high commodity prices, whereas energy transfer has been lagging, but doing really good because its revenue growth over the trailing 12 months is almost 57%. That's pretty good. How about profitability? And here's where energy transfer is a very interesting case study. On a gross profit margin basis, trailing 12 months, it's only, only at 20% because the industry is at 37. But look what happens after that. The operating profit margin for energy transfer eclipsed the industry average at 7, whereas energy transfer is 8.6. And then that delta gets even bigger when you look at the net profit margin. So you can see that energy transfer is an exceptionally well managed business because even though its gross profit margin lags the industry considerably, its net profit margin, which is what matters because that's ultimately what's going to give you your earnings per share, is way above the industry's norm. So energy transfer sort of overall, if you look at all the different fundamentals of the stock, I'm not looking at the balance sheet, I'm just looking at the snapshots, it looks pretty good as a whole for me, right? How about financial strength? You guys know I always look at debt, right? The total debt to capital ratio is 53. The industry is only 33. But remember, once again, energy transfer is not your typical energy type company. It's a little different. The 53% is maybe somewhat high, but at the same time, it's okay. Why is it okay? Well, firstly, they have a quick ratio of about 1. So at the bottom here, you can see that the quick ratio for the most recent quarter was 0.98. Now, 0.98 is basically 1, and that means they have enough cash and cash equivalents on hand to easily pay their immediate expenses, which is their current liabilities, usually within 30 days or so, right? So 1-to-1 means there's enough cash in the bank to cover all your liabilities in terms of your immediate payments that are due for whatever that might be. But if you look at the line just below that, the interest coverage. So when you have a company where the operating profits are 5.5 times greater than the interest payments, they have literally no difficulty repaying debt. So even though the debt is probably arguably a little high and they can do a little bit of balance sheet repair and bring it down a bit, overall, it's not bad. It looks pretty good. So these are the two guys, so Tom Long and Mackie McRae, who basically are running the company. They're co-CEOs. I don't personally much appreciate the concept of co-CEOs, but hey, so be it. At the end of the day, if you have two CEOs, you never really sure who the guy who's making the decisions, and it's very a ridiculous assumption to think that they must agree on everything if they are co or joint CEOs of the company. However, in their defense, they've been doing a pretty good job. So that's sort of a snapshot of energy transfer. I'd be interested in your opinion. So if you share with me what you think about energy transfer, you can let me know in the comments. We can get some conversation going. I know many of you are long energy transfer along with me. So if you got in at the time I got in, which was sort of $8, $9 or so, you probably reasonably satisfied with where you're at. Energy transfer potentially could be a two-bagger for you, like sort of going from 8 or thereabouts, maybe $9 to 16 or $18 or so. But that's pretty much it. So you're not going to get a 5 or 6x like you got for Occidental Petroleum. But all in all, it's pretty good. It's a solid stock to own in your portfolio, and it pays a good dividend. And for me, right now, as a whole, I'm interested in your decision or your opinion on that. So let me know what you think, and we'll go from there. Thanks for watching. Bye bye.